The last 6 months is mostly a yawn. Like I said, we get excited when things are at 3% or 2% of 10% of liquidation value. It really didn't do much for me, if you will. I generally find that in the United States, almost anything I look at, I either find is fully priced or overpriced. And one of the interesting things we had happen in the last maybe 18 months or so, maybe 2 years, is that there was a very dramatic change in interest rates, very significant upward movement in interest rates. And one thing that should affect stock prices quite significantly is interest rates. And so when we see a huge rise in interest rates like we've seen recently, it should lead to a significant drop in the market caps and valuations of stocks. We didn't really see that drop, which is also an anomaly, but it's an anomaly in the wrong direction. So basically, if stocks were priced to perfection a year ago or 18 months ago, they're definitely overvalued today because we have a huge change in interest rates. And so I think the last 6 months, you know, for a cheapskate like me, really didn't make much change to the way I spend my days. And so, like I said, and the other thing is that in investing, one is far better off not looking at macro events and not looking at, what's the market doing and this and that. Focus on the individual business. The first question when you look at a business is it within my circle of competence? So focus on the businesses that you understand really well and tune everything else out. We don't know what interest rates are going to do. We don't know what the economy's growth rate is going to be. We don't know many things. And there's no point wasting time or spending time on those types of questions. And I think what we really should focus on is individual businesses that you understand really well. And then specifically within that group, the businesses which are anomalies in the right direction.
We are going to be buying things, one thing or another, operating businesses, stocks, high yield bonds, whatever. We're going to be buying things for as long as I live. Just like I'm going to be buying groceries.
Longer than that, Warren.
Yeah. Yeah. Charlie's just waiting to take over after I. And I'm going to be buying groceries the rest of my life. Now, would I rather have grocery prices go up or down if I'm going to be buying groceries tomorrow and next week and next month and next year? And the answer is obviously, if I'm a net buyer, I will do better if prices are lower. We're not good at forecasting markets. I mean, knew that we were getting enormous bargains in the mid 70s. We knew that the market went crazy to some extent in the late 90s, but we don't have much, we don't spend any time, Charlie and I spend no time thinking or talking about what the stock market is going to do, because we don't know. We do know sometimes that we're getting very good value for our money when we buy some stocks or some bonds, as it may be. But we are not operating on the basis of any kind of macro forecasts about stocks. And there's always a list of reasons. You gave a few. There's always a list of reasons why the country will have problems tomorrow, but there's always a list of opportunities which don't get mentioned quite as often. So we don't sit down and make a list of the bad things that are happening in the economy and the good things that are happening, and therefore expecting the stock market. It might not. It doesn't behave that way, even if you could correctly forecast some of the bad things or good things. Overall, I'm an enormous bull on the country. I mean, over time, this is the most remarkable success story in the history of the world, if you think about it. I mean, in 1790, we had less than 4 million people in this country. There were 290 million people in China. There were 100 million people in Europe. And they all had the same intellect we had. They were in the same general climate. They had lots of natural resources. And 215 years later, those 3.9 million people, I think, actually, have 39 million people, I think, actually have 30% or so of the world's GDP. So it does not make sense to bet against America. That doesn't mean all our policies are smart or anything, but I do not get pessimistic on the country. I worry about the big worry is what can be done by either terrorists or governments that have access to nuclear, chemical, or biological weapons. But in terms of the basic economics of the country, your children are going to live better than you live, and your grandchildren are going to live better than your children live. And we do not focus on macro factors. If you leave the NCB, nuclear, chemical, biological, but I do not feel that way. But you'll get to see which one of us is right 20 or 30 years from now. I have seen more people pass up opportunities because they get focused on a single economic variable or a single problem that the country faces, and they forget about the good things. I mean, if you can buy very good businesses at attractive prices, it's crazy to say, I think I'll sit this out because it might get a little cheaper next year or something of the sort, and because the world's going to go to hell. We've never operated that. We've never decided not to buy a business we like because of a macro view, have we?
Not yet.
Okay. It's hard to get him to really agree with you. I've been working on it for years.
No one has a crystal ball, but I would say that I think that what I have always focused on as an investor is forget the macro. The macro is too hard to figure out. Okay? Focus on individual businesses. And in your business, for example, it's really simple. If there is a house for sale and you look at the unlevered return from the rent, you know what the rent is and you know what the cost of that house is. And both of those are current situations, and you can make a judgment call. Hey, this is in a great area. I know the area. I know whatever. So the micro in investing always trumps the macro. And so as investors, our jobs are not to figure out what the unemployment rate is going to be, what the interest rates are going to be, what all those things are going to do. Our job is to say, hey, listen, if I can get a home for $250,000 and the rent is going to be $25,000 a year or $30,000 a year, my NOI in real estate terms, you do that all day long. And so I think it's the micro that one should focus on. Forget the macro.